How is it that you managed to produce new guidance today that is better than the guidance you had to withdraw earlier on in the year? What is it that's gone well?
Well, our business has been negatively impacted significantly by the coronavirus on our volumes. They were down 14, 15, 16% in the second quarter. But profits were up. We've done really well on the cost side. Our prices are slightly higher. We have been doing a really good job in terms of adjusting the network to the capacity actually needed. So that's driving the higher earnings.
So that's why the higher guidance. What kind of visibility? You've given this guidance then, so I expect you have some visibility. How firm is your or how good is your visibility for the rest of the year and into next?
Well, we are halfway through the third quarter. We have seen sequential improvement in trade volumes since April. April was the worst month. Volumes were down by 20% year on year. And since then, we have improved, and we expect in the third quarter that global trade will be down year on year in mid single digits. So a continued improvement in volumes combined with low cost and low fuel prices and slightly higher prices means that we can guide between 6 and 7 billion of operating earnings.
So improved volumes, but not normalised, Soren. What expectation do you have for when volumes will normalise back up to 2019 levels? I suppose I mean.
Well, our basic scenario have been for quite a while now that we will see a U-shaped recovery, meaning that we will be back to 2019 volumes sometimes in the early part of 2021.
You mentioned that you've been successful on cost. What is it, Soren, you've managed to do to bring costs down?
Well, like most companies, we have benefited, of course, from less travel expenses and entertainment bills. But the big amounts are really on the fuel prices. It's on our network costs. We operate 700 ships in the network, and we have cut down on the network, on the capacity that we deploy. So that means we are saving money on ships. And then in general, all of our operating costs, of course, going into the crisis, not knowing what would happen, we accelerated all of the cost-saving initiatives we already, if you will, had in the drawer. So it's pretty cost across the board for the company.
Freight rates have been going up, but some of your business, I suppose, operates on contracts that were signed at different times. So how much have you been able to benefit from those freight rates rising?
Well, about half of our volumes are long-term contract volumes, so annual contracts for the most part. There, of course, the freight rates are what the freight rates are. And the other half are spot volumes where we benefit from higher freight rates when they go up.
You mentioned taking some capacity out or reviewing the number of ships you're operating. So how much vessel capacity have you taken out? And has that been something that you think has supported those freight rates?
Well, we have all through the pandemic offered the capacity that our customers need, and obviously we took out a lot up front, almost 20%. We planned for taking out in April when the crisis really hit, and then we have been reinstating, if you will, capacity in line with demand.
Do you expect any of your rivals to get into trouble, Soren? Is this going to be an opportunity for you to buy up smaller players? Is that something you're interested in?
Well, I think we have, with the acquisition of Hamburg Süd that we did in 2017, our ambitions in terms of major investments on the carrier side is probably have been met, at least for now. Our focus is on growing our landside business, both our ports business, but also our landside logistics business.
And what about others in the sector, though? Do you expect consolidation to be a theme?
I personally believe that we will see one more round of consolidation in our industry, but the carriers in general will come out of the COVID pandemic stronger, it looks to me. I mean, most people have reported pretty good second quarter results, so that wave of consolidation is probably going to be later rather than sooner.
In terms of your balance sheet, you finished a round of share buybacks, and I'm not talking about buybacks with many businesses right now. That certainly doesn't seem to be at the front of shareholders' minds, and some companies having to come to market to raise cash from shareholders. Are you thinking about when in the future you could do any further buybacks, or is that just not a topic of conversation at Maersk right now?
Well, it is a topic. We finished our current program in July, and we have earlier said to our shareholders that we plan to relook at more share buybacks when the program was done. We will do that in the fourth quarter and come out with some statements on that latest in connection with the full year result. But it is our intention to continue to distribute more proceeds.
Yeah. Okay, to continue to distribute. That's interesting. Are you seeing, in terms of your operations, with COVID-19 still in pandemic mode, are you able to operate normally, Soren, or have you had to experience higher costs to protect your staff and your business?
We have. I think I can say that we are very proud of the fact that we have kept our global network of more than 700 ships operating. Our ports have been open. Warehouses have been doing business, as have been our inland transportation operations. So we have been able to serve our customers. The issues that you have seen with global supply chains for our customers have not really been related to being able to transport goods from one end of the world to the other. It's been much more related to single source reliability and lack of buffer stocks.